You've been hearing about NVIDIA everywhere. Your coworkers are talking about AI stocks. You see the headlines about record earnings. But when you look at the actual SEC filing, it's just a wall of accounting jargon and numbers that might as well be written in ancient Greek. Here's the thing, those numbers aren't complicated, they're just badly translated. I'm a financial analyst, and I've spent years turning corporate accounting speak into actual English that real people can understand. When NVIDIA files their quarterly report with the SEC, they're required to tell the truth, but they're not required to make it easy to understand. That's where we come in. Today we're breaking down NVIDIA's most recent quarter on file with the SEC, ended April 26th, and I'll walk you through exactly what each number means for the actual business. But first, let me show you why the revenue number everyone's talking about is just the beginning of the story. Let's start with revenue, that's just total sales, the money coming in the door before any expenses. NVIDIA reported $81 billion in revenue for their latest quarter, up 85% compared to the same quarter last year. Now, 85% growth sounds impressive, but here's what most people miss, we need to look at the trend. Over the last 5 quarters, their revenue went from $35 billion to $44 billion to $46 billion to $57 billion to this latest $81 billion. Notice something? The growth isn't just continuing, it's actually accelerating dramatically in this latest quarter. That jump from $57 billion to $81 billion is the biggest single quarter increase we've seen. But revenue is just money coming in, it doesn't tell us if they're actually making any profit. This is where it gets interesting. Net income, that's profit after paying for everything, all the expenses, taxes, the works, came in at $58 billion. Let me put that in perspective. They brought in $81 billion in sales and kept $58 billion as profit. That means their profit margin is over 70%. For context, most successful companies are thrilled with 10 to 20% profit margins. Apple, known for premium pricing, typically runs around 25 to 30%. NVIDIA is essentially printing money at a rate that would make most CFOs think there's an accounting error. This isn't just a growth story anymore, this is a profitability machine. But the number that really matters for shareholders is different. Earnings per share, or EPS, is profit divided by the number of shares outstanding, it's what each share of stock earned during the quarter. NVIDIA's diluted EPS was $2 per share. Here's why this matters, if you own 100 shares of NVIDIA, the company earned $239 on your behalf this quarter. Multiply that by 4 quarters, and you're looking at potentially $956 per year per 100 shares, though of course, business results vary quarter to quarter. With the stock currently trading around $209, that gives us some sense of valuation, though remember this is just one quarter's results. The stock is up 4% over the past month, which is relatively modest given these numbers. That tells us something important about expectations. Here's what jumped out at me when I mapped the 5-quarter progression, the revenue growth isn't just steady, it's exponential. From $35 billion to $81 billion over 5 quarters represents more than doubling their business in just over a year. The profit margin stayed incredibly high throughout this growth, which is rare, usually companies sacrifice margin for growth or vice versa. This suggests NVIDIA isn't just riding a temporary wave, they built something with genuine pricing power and operational leverage. The AI boom isn't just helping their sales, it's letting them charge premium prices while keeping costs relatively controlled. But there's a critical factor most investors are missing. These are trailing numbers, they show us what already happened, not what's coming next. The quarter we just analyzed ended in April, and we're looking at it months later because that's how SEC reporting works. The real question is sustainability. Can they maintain this pace of growth and these profit margins as competition inevitably increases? The numbers show incredible current performance, but they also show a company that's priced for continued perfection. At over 70% profit margins, there's room for compression. With 85% revenue growth, there's nowhere to go but down eventually. This doesn't mean the story is over, just that the expectations embedded in these metrics are extraordinarily high. When the next earnings report comes out, here's what I'll be watching. First, whether revenue growth can stay above 50%, anything less might disappoint investors who've gotten used to these massive beats. Second, whether profit margins stay above 60%, margin compression would signal increasing competition or investment needs. Third, any guidance or commentary about future demand, though remember we only analyze filed numbers here, not forward-looking statements. The key is whether NVIDIA can demonstrate this isn't just a temporary AI gold rush but a sustainable competitive position. These numbers show a company firing on all cylinders, but they also set an incredibly high bar for what comes next. Look, these numbers show NVIDIA is executing at an extraordinary level right now. 85% revenue growth with 70% plus profit margins is almost unprecedented at this scale. But remember, this is educational analysis, not investment advice. Every investor's situation is different, and past performance never guarantees future results. If you want deeper dives into earnings like this, check out nexusaicalls.com where we break down the numbers that actually matter. Always do your own research, and never invest more than you can afford to lose.